Okay, I want to go ahead and get started. There's a lot to discuss here tonight, and I'm sure we're going to have a lot of people on because everyone is very much concerned about what LaRouche Pact has to say for the March 13th strategic overview. And if you haven't gotten all your friends on to join this discussion for tonight, I would encourage you to do so. And for those who are going to be watching on YouTube or also on our feature for Rumble, we're going to start actually advertising our discussions on Rumble a little bit further here too. So I just wanted to give people a heads up for that. So I'm Keisha Rogers, and I'll be joined tonight by Michael Stager, as usual, for our Monday overview. And just to start with what is on everyone's minds right now, obviously the question of the financial collapse and the collapse of the two banks that just happened over the course of the last few days, which are now, as we know, the SVB, the Silicon Valley Bank in California, and the Signature Bank in New York. And what has happened with that, we have actually responded to the call of the need for how the solutions that are needed at this moment in time have been long understood by LaRouche Pact, have been long understood by Lyndon LaRouche, who, as a leading American system economist, forewarned going back to 2007, 2008, when we saw the collapse, which most people in the media, in the economy, are saying that this is another 2007, 2008 collapse. Well, Michael's going to talk to you about the fact that it's been over 15 years. We have seen not a response or a solution to the collapse in which LaRouche outlined and warned about back in 2009, 2007, 2008, as the crisis was unfolding. But what's happened to our system, to our economy, to our culture, I don't think that Mr. LaRouche, if he was alive today, would even be able to wrap his mind around what has happened to our culture since the time of the collapse of the system in 2008, which he was warning about long before that, especially when the agenda right now is around equity, inclusion, all of this crap that's going on. Now, as people know, the announcement that took place recently by the FDIC, by the Federal Reserve and Treasury, that everything, and of course Biden came in and said that everything that everyone in terms of these two banks will be, the depositors will be protected and their deposits will be saved. So the question is, we'll get to the question of what does that mean? Who are these depositors? What protection is it there for these depositors? But the most important thing is what's not being said. And we were having a discussion earlier today on the question of, as you will see from our LaRouche Pact website, the latest articles that we posted have been to remind people of the campaign that LaRouche Pact has waged, and we have been out front on, for the return to a national credit and national banking system. This is the solution. Even today, you saw that the markets, again, everyone's looking at probably calling your financial advisors, what's going on with my money in the markets? The markets, Dow Jones, the New York Stock Exchange crashed or collapsed 5 days in a row, we're down rather. But this is not what we should be looking at. We have to go back to what Mr. LaRouche said about the productive economy, the real economy. And as we initiated in our campaign to abolish the the Federal Reserve and to reinstate national banking policy. That is what has to be the understood education of the population and the citizenry. I just want to pull this up quickly here, just to make sure. This is our website. So I want to highlight a couple of articles here that people should take a look at on larouchepac.com if you haven't already seen them, as far as what President Trump is calling for around the initiation of freedom cities, but this goes to his policy and plan for manufacturing, for industrial development, making the United States a manufacturing superpower. And you can't do that with collapsing banks. We have to have a national credit policy. In response to the recent announcement of the SVB Bank and the collapse of SVB Bank, we put out this statement, which I would encourage everyone to read, which is very much along the lines of what we've been saying, that the immediate need, that the collapse of the SVB Bank and also Signature Bank indicates the immediate need for a national banking system to get rid of the Federal Reserve and to recognize what LaRouche warned about what happens when you rely on a monetarist system. So let me go ahead and turn it over to Michael now, and we're going to get into the implications of this. Go ahead and stop that share for a second, for what's happening, not just here in the United States, how this impacts the whole question of the war that's underway right now and the overall system as a whole, and what you should understand about what can be done about it. All right, so Michael, let me highlight you here and get you started.
Thanks, Keisha. Hi, so I'm sure everyone's kind of wondering, and I'm sure you've investigated, had discussions with people, watched news, checked out reports on the internet regarding some of the details over the Silicon Valley Bank, the bank run that happened starting Wednesday through Friday. It was shut down. I mean, some basic specifics, of course, may be necessary just to situate the context. It wasn't the first bank, it was the second. There was Silvergate Bank in San Diego, which was largely a crypto-associated bank. And then on Sunday, Signature Bank out of New York, Silvergate shut down. Signature Bank is shut down by the state of New York. I think they had about 90 billion in assets. But Silverbank, of course, Silicon Valley Bank has been the predominant focal point, but it is a series of events that have been unfolding fairly quickly. Now, we could dive into some of the weeds, and people may have questions. We had a very thorough discussion with our kind of leadership team this afternoon to look at all the various elements and aspects that may be relevant to this. But in the context we've been discussing for a long time, in this kind of ongoing discussion we have on Monday evenings, it is a question of how do we respond effectively as a political movement to shape the policies and approach towards what is now unfolding rapidly. And it's not something that hasn't been unfolding previously, right? It's a cycle, it's a process. So it was happening prior to these points of singularity, and now it will continue to advance. And no matter what they say, from the Treasury, the FDIC, or the Federal Reserve, these are bailouts. They're bailing out the banks. The alternative would have been, and what should have been done, is a basic haircut. So after $250,000 deposits, some deposits went up to as high as $400 million, $500 million deposits. These are companies sitting on huge, huge piles of cash. And Silicon Valley Bank was largely a bank chartered as part of this kind of venture capitalist Silicon Valley agenda. And we'll touch on more of that in a second. It's not your typical commercial regional bank, but it is not an investment bank per se. It would have been regulated as a commercial regional bank. What should have been done if they couldn't cover their bank deposits, and why they couldn't cover them is a different question. But if a bank couldn't, and there was a bank run and there was an emergency, certainly this was a panic that was put into play. Certainly there are people who are screaming that the sky is falling and that systemic bailouts are required. We'll touch on that in a second also. But what could have been done instead of this special fund set up, a facility, as they call it, at the Federal Reserve to ensure that certain assets on the books of these two banks, Silicon Valley and Signature, and any others, since under law you can't apply it to just a specific entity, will now be able to make sure that all of the depositors are secure and that any assets on the books are met at whole value, are loaned to at full value. So if it's a treasury bill, it's the full maturity of the treasury bill. $1,000 bill in 10 years is $1,000 right now in terms of lending capacity for 1 year. That's the facility they set up to then ensure that there's no fire sales of assets and that all the depositors can be met. What could have been done instead, and instead of selling Silicon Valley Bank, this option was taken instead. Part of Silicon Valley Bank was sold to HSBC in London, but the large United States entity was turned into a different company under federal, oversight, receivership. That you could have given the depositors a haircut. You could have put it through Chapter 11 bankruptcy. You could have said what in real receivership and said what are the assets on the books? What do we actually have going on here? Who are they lending to? What value do these companies have? A lot of the startups don't have any value. They may have market share in some stupid scooter business or something like that. And then they get a bunch of equity value, then are then shipped off to Wall Street for an IPO. And then the population is asked to buy in on this. A bunch of investment funds buy into it because it's the new Silicon Valley startup. But of course, a large majority of them fail quickly because there's nothing really to them, or they hit an economic bump in the road and there's nothing to them anymore. Put it under receivership, figure out what were these actual loans, what's real in this bank. And then also create, deal with those assets over time, no fire sale, and then give the depositors a 10%, 15%, 20% haircut. They get 80 cents, 90 cents on the dollar over 250,000. Now, if you're holding $400 million in the bank, that can be quite a haircut. But there is risk. And there's a thing called the FDIC limit, which every entity in this country is well aware of. So that process could have occurred. Instead, there's now an implicit or almost overt pledge to guarantee every deposit in the country at any maximum length. So if you're thinking you needed to invest into treasuries or into a company or into whatever people might invest in these days, a mutual fund or something, to not have it just sitting at a bank because it's not going to be insured anyways. Now you can just stick it in a bank savings account and now it'll be implicitly insured, guaranteed for at least the next year, however long this facility remains open. These things are opened and they seem not to close. We'll get to that in a second also. That's what could have been done here. But that really is not the major point of this situation. So that's what a prudent society would look like in terms of responding to this. There is far greater panic, as we know, amongst the people, the priesthood, the management class of this financial system. There is far greater panic. There's panic regarding the entire national security complex, the kind of military intelligence complex regarding the Ukraine war. This thing is failing. The Russians are just marching now westward, slowly but surely. The Ukrainians could not prevent that. There was increasing crisis over the last week over Tucker Carlson's exposure of the J6 tapes. And the entire story, which was concocted and set up to ensure that Donald Trump could never run for office again, has just been blown up, has just blown up in their face. It wasn't going to stop him anyways. But that was the whole basis of concocting it, and to make sure under an emergency session that there were no challenges to the presidential vote. The Electoral College was then unchallenged in the emergency congressional session. But that was exposed by the tapes. And then you have the weaponization of government committee hearings with Matt Taibbi and Michael Schellenberger on the Twitter files. And the Democrats went nuts. And who did the Democrats put up as the ranking minority leader or ranking member on that weaponization committee? It's a non-voting member from the Virgin Islands who was a representative of the International Communist Party, or she might as well have been, as were many of the Democrats who now believe that some type of thought or ideas or even jokes about current policies on COVID or on the banking question should now be censored because it threatens state power. And you have Democrats literally calling for censorship on this banking crisis. So there is increasing panic already in terms of this kind of globalist liberal system of mind control. The mind control, the narrative on Russia, the narrative on the election, and now the narrative on the economy and the banking stability. Biden today had the goal to say that what he and Barack Obama did really helped stabilize the banking system, and so we can all breathe easy. If you believe that, then get off the medication quickly. Talk to your doctor and find some other approach because you're not thinking clearly or you've lost all sense of memory. Because what are we dealing with here? We're dealing with a system that has lost all sense of principle. It has lost any sense of reality. These people in this system still believe that Silicon Valley is an engine of economic and technological growth. Elon Musk came into one of the key pillars of Silicon Valley success, Twitter. He cut over 80% of the staff. He's still firing people, and it hasn't caused a problem yet. 80%, 4 out of every 5 people employed in these companies could very likely be expendable and not change the dynamic of the basic services these companies provide. And then you have to ask, are the services that Facebook and other companies providing even really worth anything at all? Do we benefit from them more than we are injured? When you think of young people's sense of identity, psychology, social interactions, it's probably a net negative. And these companies, these large big tech companies are laying off in general, not just Twitter, but in general, 10% and now more of their staff. And you have to get a sense of how the Silicon Valley so-called great engine of ingenuity works. These startup companies with an idea create some sense of equity from venture capitalists investing into them. The venture capitalists get money from where? In some cases, Silicon Valley, from private equity funds. It might not be Vanguard and BlackRock, but it's that kind of aggregate funding and financing for private equity, venture capitalists that throw then money at a company, a bunch of kids drinking hyper expensive coffee, organic Cheetos, and playing a lot of pinball and video games, sitting in an office somewhere in Santa Clara or San Francisco, coming up with some app idea that everybody's going to use for about 6 months. Meaning that once it gets sold, people will use it and then the fad will die out and go away. But somehow this is a great economic engine. So this has been running for a long time. Once that company gets enough equity and has some market share in, say, battery-powered scooters, which was a craze about 3 years ago. So there was like 17 different companies operating in the Bay Area with electric-powered scooters. Some of them have probably been IPO'd in Wall Street by a big Wall Street bank, creating some kind of value for investors. It's a Ponzi scheme on every level. And the question is, where did this process really come from? How have we been participating and believing in this? And the underlying question at stake here today is not the insanity of Silicon Valley or Wall Street speculation. That, of course, is insane. But it's the nature of the beast. The question is, why has this beast become so out of control that it's now, why have we let the beast become so out of control? Now, many will point out that part of the reason Silicon Valley Bank ended, and you'll have people who say it's not that big of a deal, the real problem is the Federal Reserve. Well, that's certainly the case. The Federal Reserve has raised interest rates. Now, how have they raised interest rates? Not by the transaction of treasury bonds, but they've increased the savings rates, deposit rates of the participating banks in the Federal Reserve System. So they're literally paying banks money to deposit their money into the Federal Reserve. So the Federal Reserve is now becoming a net cost to the American people. When Janet Yellen says this is not going to be paid for by the taxpayers, well, they can say that all they want to if the Congress isn't going to pass more money. The reality is, if you're going to be increasing liquidity into the economy and basically going back to a quantitative easing policy, which is what this is, where they went to quantitative tightening less than a year ago, they're now going back to quantitative easing, and maybe in a limited fashion, at least how it's initiated. When you create more money and you devalue the currency, you are taxing the population. Inflation is a tax. So the net outcome of this, so yes, the Federal Reserve has caused a problem. It's raised rates. It caused Silicon Valley Bank to have certain losses. That's at least the ostensible basis right now from what we understand of how this unfolded. But the bigger question, the bigger dynamic, has been what's been going on for over 15 years. We have to imagine Silicon Valley Bank and all of these banks have been operating in a zero accountability environment. Since 2007, 2008, there has been credit facilities, they're credit facilities, but they're monetary facilities. First, the TARP bailouts from Congress, and then all the various quantitative easing and other facilities at the Federal Reserve. For 15 years have been creating an abundance of money printing and liquidity and buying up of these so-called financial assets off the banks for 15 years at 0% interest rates. What does that mean? What does it mean for 15 years? They've made sure that all of the banks had plenty of money at 0% rates. They could buy up all of the mortgage-backed securities, all the treasury bonds, whatever other assets they might have, and that the Federal Reserve will constantly be buying them back up, and there'll be constant new liquidity, including up to $5 trillion new dollars just during COVID alone. You've created an environment where you can borrow from the future at zero cost. You can borrow, you can rob from the future at zero cost. There's no cost for 15 years, or maybe 14 years if it started last year to raise rates. That's what quantitative easing, that's what 0% or approximately 0% interest rates meant. That people could continue to borrow more and more money, and the amount of debt they could carry was practically infinite. They could just borrow more and more and more, infinite lines of credit, because there was no intrinsic cost. You didn't have to pay any debt service. You just had to give the money back at some point at face value. But the money that was paid back in 2 years or 5 years was of intrinsically lower value because of the inflationary process. We've been looting from the American people since the 2008 blowout and bailouts. You've been looting the American people, the working class, the basic homeowners, the middle class, the new person who graduates college and enters the workforce has been constantly looted. Medical expenses have been skyrocketing. College prices have been skyrocketing. Home prices, once they kind of bottomed out, have been skyrocketing. Equity prices have been skyrocketing. But you haven't seen an actual increase in the kind of wages and in the standard of living of the population. You've been looting them for 15 years, inflating all of the costs of living and not investing into the infrastructure, the production, the manufacturing, the livelihood of the population more broadly. This process of quantitative easing, massive what they call monetary expansion or modern monetary theory, is insane. It's never been done before. Constant. I mean, they even had negative interest rates. They would pay you. Trump used to joke about this. They would pay you to take the money. This was in Japan, maybe the European Central Bank for a bit. It would pay you to borrow money. To pay you to borrow money. Well, equity prices in the stock market, like the S&P 500, might go up 30% a year. So those who had access to large lending or large borrowing capacity could go just put it in the stock market index and make 30% return and then get paid to have borrowed that money in the first place. And while all of this has been happening, you've been looting the population. So this banking crisis is not a good thing. It's not something to be cynical about. It's not something to say, let's burn the whole system down. You don't want a doubt or uncertainty to go through the entire medium-sized regional commercial banks. Silicon Valley Bank is a different one. A lot of these crypto banks, and crypto itself is another absurd example of what Silicon Valley and so-called startups have become today. The infamous Theranos, Elizabeth Meyer, and Theranos, if you don't know the reference, look it up. It was a massive biotech scam run on the ethos of Silicon Valley. This is how this place operates. But local commercial banks, regional commercial banks, are essential. We lost too many of those in the 2008 process when all the money, all the bailouts went to the big banks or the big insurance firms like AIG or whoever else extended throughout Europe and the rest of the world. Massive bailouts to the bigger banks, but the smaller banks were left. And then they were massively encumbered by the Dodd-Frank 30,000 pages of regulations that no small regional bank could really handle. And they ultimately implemented a bail-in policy, which if this kind of crisis does hit a bigger bank, like Wells Fargo or Bank of America or Chase, they will just take some of the deposits that are not insured and give you preferred or non-preferred stock. That's the bail-in. They'll loot your money and say you have shares now in the bank. That's what Dodd-Frank ultimately was about. But it also was 30,000 pages of regulations that no small commercial bank's law firm could possibly deal with, or not at the cost it would be required. So 15 years of this process, 15 years where everyone in the banking and financial environment of venture capital, private equity, Silicon Valley, startups, IPOs, equity values, stock markets, and banking, no accountability, especially if you're a large firm, if you're a big player. Think about FTX. FTX is now identified as a fraud from the very beginning, and yet it was supported entirely by the Silicon Valley complex. The kids' parents were professors at MIT in economics and professors of law at Stanford or something equivalent who run FTX. But here's another thing we've got to confront. That over the last 15 years, and some people may remember this from the movie Big Short, which was an entertaining film to give one a sense of how the housing bubble was built and how it was basically exposed. The short of it is this, no pun intended. A few outsiders identified that this was a racket, that mortgages were being lent to people that could in no way ever, ever, ever pay them. And yet they were being securitized. And once you know the underlying element of that security is without credibility, is compromised, then that security is compromised. And if uncertainty towards the entire mortgage-backed securities, these are mortgages that are bundled as basically like bonds. If that's compromised, and you have to doubt the whole valuation system, then the whole system goes. Well, a few outsiders realized this. What they then went and did was make major bets against the system. And some of the banks laughed at them when they did that. You're going to bet that the entire mortgage-backed security system is going to fail? Yeah, I'm going to make a bet on that. And they got really good odds, you can imagine, because nobody ever thought mortgages would fail. Everyone said the mortgage system is, the rock bed of the American economy. What did the banks ultimately do? They realized the few outsiders were right. And the big banks joined in on betting against the system. So even though for the last 15 years, we've had perpetual bailouts, a massive expansion of monetary supply, a massive expansion of government debt. Think about what government debt has done. It's now $30 trillion. It was probably approximately 5 in 2008 as a best guess, and rapidly expanded. The Dow Jones was under 10,000. It is now over 30. Now it's coming down, but it was almost near 35. There's been a massive expansion of money supply, but many of the people involved knew that this was, again, a racket. And so you have people today, some of whom were screaming, people like Mark Cuban or Bill Ackerman and others, hedge fund, private equity, billionaires, whatever, who are screaming, bailout, 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 open up the bailout, stop the quantitative tightening, lower the rates, stop the rate rises. But how do we know that they don't have major bets that the whole system is supposed to go? Because they're inciting panic. They're inciting a sense that the whole system may be compromised. Even what was happening with Silicon Valley Bank was a little bit of a panic scenario. It doesn't mean they didn't have problems. There are reports that they had problems going back into early 2022. They had to start borrowing in the billions of dollars from federally insured banks, like the Federal Home Loan Bank in San Francisco. So Silicon Valley Bank probably had a problem. They probably had a problem because Silicon Valley's not seeing the 0% flow of debt come through to these startups, or the 0% debt come through the big tech companies, which a lot of times buy up the startups, right? So the big fish eats the little fish makes, the people that invested in the little fish make money because the big fish bought it. But if they're not buying any longer, if they don't have 0% loans, just like you, if you're going to buy a car and it's a 10% rate, it's a little different than if it's a 0% rate. But some people are betting against the system. They're betting even against the United States. They're betting against the US dollar. It's called shorting the system. Trump actually made a reference to this a number of times during his presidency about the kind of people, you actually have people who want to incite panic. Some of you may have seen this during the pandemic. When the pandemic hit in March of 2020, there were people who were screaming, this is the end of the world. The whole financial system is going to go. They're going to shut down the economy. Everything is going to blow out. Everything is going to collapse. Everything's going to go. And then within a month or two, you found out that they made major investments and made billions. And of course, they brought in BlackRock to manage it all, and more bailouts continued, and massive monetary expansion just during COVID, as I mentioned. So what does this mean? Well, it means we're dealing with something unprecedented. Never before has this quantitative easing process ever occurred, where you looted the future at 0%, almost without concern for wherever it was going. It could go to anything. It was pure monetarism, pure rotten monetarism, just massive amounts of money, cheap debt, and just give it to the rich people and just go, spend, create value somewhere, in stock market, in houses, in medical costs, in college costs. Create value, create more transactions. And some people were betting against the entire system on this process. Well, it'd be nice to say, let the banks go, let them fail, pass some legislation, stop all bailouts. Certainly we shouldn't be doing bailouts. That's why I started with what reorganization should have looked like with these banks. Prudent, honest, transparent, trustworthy. But the problem is, why didn't they do that? Because if they dug into it and it was transparent, what people would have found out is there are much bigger problems afoot to our entire financial system. That it's been hard to not infect every financial institution, because 15 years is nearly an entire generation operating off of the most obscene, unprecedented policy of finance and monetary policy. The way we've got to address this, and I'll end my remarks here, and if people have questions on specifics or other things, we should take those. We should have a good discussion tonight. We've got to change the political regime. That's why the MAGA movement, why President Trump remains so critical. Because this is not merely a question of telling them to implement LaRouche's 4 laws. LaRouche's 4 laws, we can touch on them again if people are curious. Keisha can even post them for people to look at, are where we've got to get to. That's the foundation of what a sane, healthy, national, financial, and economic policy and system look like. They're the basis of reorganizing the global financial system of currencies and trade, is by getting back to the old American system that LaRouche has advanced and put together in his 4 laws. But how we get to those 4 laws, stable regulated banking, national banking for credit expansion for industry, infrastructure, scientific research, and so on, requires a commitment to one thing above all others, and that is the livelihood of the population. The people come first. That's why this problem is only going to continue to inflict more wounds. We are not dealing with a healthy economy. People's lives are getting harder. The inflation is likely to get worse. Unemployment, maybe not cheap labor unemployment when you bring in 2 million, 3 million, 6 million illegal immigrants for cheap labor at hotels or cleaning services and so on. But when you're talking the engineers, the computer programmers, the salespeople that worked at all these big tech or Wall Street, who have mortgages and families and kids and they're looking for other jobs, if that continues to snowball, we're looking at bigger and bigger problems and bigger effects down the road. Even raising the interest rates as rapidly as they have hasn't really addressed inflation. It's much more a question of supply, energy prices. And yet businesses are not borrowing. They're not creating new industries. They're not creating new jobs. They're not expanding their operations because the cost of borrowing is much higher today. So we've got effects of this situation that started in this period which are going to continue to have to lead to what many people say is going to be a recession sometime this year. Well, maybe it's already started. But what's been missing, what was missing during the 2008 reorganization, why Obama was far worse than any other president in US history, because he hated the population. He hated the American, he still hates the American people. He hates all people. He hates all people. And Biden doesn't know what people are. He just lost any sense of it if he ever knew. He doesn't even really know what's happening. But for the people to come first means you have a clear principle. You operate on how do we move the money out of these Ponzi schemes, these financial bubbles, out of where banks are sitting on hundreds of millions, companies are sitting on hundreds of millions of dollars, or Silicon Valley Bank had so much money, it didn't even know where to invest it. So it just bought 1% treasury bonds long-term. You have no idea where to invest in? The same is true with Google. Google is flush. It's got hundreds, probably billions in cash, doesn't know what to do with it because we're not growing and expanding the economy. We're not taxing the speculation and rewarding real investments into the physical economy. That principle, physical economy, not monetarism, has been what's been fundamentally missing in the political dialogue of our country. And the MAGA movement, its core thriving principle are people who are out there being productive every day, realize something is seriously wrong with these so-called experts. From COVID to the bailouts, to the wars, to the foreign policy, they're lunatics. Because they're in the real world producing something. They know. MAGA and Trump represent a capability to bring to bear, not just better policies, but a sense of principle, because we have to reorganize this dynamic. The Fed has been at the center of total insanity. It has from its very conception. It's been premised on war, the debt that's created from going to war, whether it's World War I, II, Korea, Vietnam, the perpetual wars of the last 20 years. The Federal Reserve has expanded and abused the American population to the benefit of international banks based on the debt created out of the war policies of the people who have, taken over our government, from Woodrow Wilson to George Bush and Obama. So in some cases, World War II is the one exception because we actually built up an industrial base, which was different than a lot of the, especially you look at Korea, Vietnam, and then the last 20 years of wars. So what we're discussing here, what we're proposing, we still have to get a better sense of what's unfolding. We don't know where this is going to go. We don't know what the implications are. There's a lot of psychological warfare, as there was around J6. There's a lot of psychological warfare. People are going to try to explain this, but they many times will have a motive. They have a bet. They're betting on some sense of where the system goes. We're not betting. We're saying that the political response has to be a responsibility to the people today, and as our Constitution puts forward in its preamble, the posterity, the future generations. Many young people today carry a sense of outrage because they know that in 2008, the decision by the political class of this country was to a globalist elite of financiers and experts and technocrats to the destruction of the actual average population. This movement, at this moment, has the ability to carry a banner of a commitment to the population above all else. And that means to make sure they're secure. That we don't end up with people like what happened in Flint, Michigan, where they, out of a chance to save a buck and make some money on a property speculation, bankers can cut the water supply of local cities because their revenues have collapsed. California is sitting on a possible volcano of massive budget deficits, which are going to leave tons of people. Now, that doesn't mean you save every possible fund in the world. But what we have to make sure is that we're committed to the population and that we're committed to fundamental reorganization of this system. Eliminate the Federal Reserve, reorganize it as a national bank, recharter it, but as a national bank, probably rename it. But let's start to get an actual credit orientation going. We've laid out the policies. LaRouche laid this out in 2014 in his 4 laws. Keisha and I were organizing around this, called the Homeowners and Bank Protection Act in 2007, which was to secure the small banks, to secure the homeowners, and to prevent bailouts. In 2007, we were already organizing for that. In state assemblies, in Congress, we've written the book on what needs to be done. And we have the precedent of having been there at critical moments to point in the direction that can help restabilize our constitutional republic. But unlike those periods, today we have a broad movement. We have a strong presidential candidate. And we have the capacity, with your engagement and with the growing numbers of the American people, who aren't going to believe that this is all Trump's fault. This is much bigger than any just Biden, that we can reorganize the system. And to do that is to fundamentally reinsure that for the next century, this 21st century, we're taking a quantum leap, as Trump said, towards new industries, new technologies, space exploration, all the things that we've discussed in our Saturday classes. What we're up against is what Barbara Boyd mentioned on Saturday night, and that is a cultural agenda with censorship, mass media, and a sense of panic and anxiety and kind of post-traumatic stress disorder from trying to survive in all of this insanity, of kind of mind control to try to drive the population in reactionary formation into doing things out of panic or emergency that are maybe sound right as a quick fix for the moment, but ultimately just undermine the population itself even in the medium and certainly long term. We've got to make the changes. We've got to get the population to consent to those changes and right this ship in a direction of real production and real development. That's what we have not been doing. And the way that this system has worked for the last 15 years has been psychotic. We've talked about it before in previous Monday discussions. We're now seeing what happens. We're now seeing what happens when you run 0% interest rates, massive expansion, massive Ponzi schemes, massive BS Silicon Valley startups, and social media apps and streaming things, and all of which is basically an intelligence operation at some level. We've got to get back to real production again. So that's the principle. I laid it out, I think, in broader terms. We can get into more specifics, but we're at a turning point. We're going to have more attention from the population, more chances to organize. And so I think Keisha and I both look forward to your questions and thoughts tonight. Let's see what people are thinking, Keisha, and try to get this thing going in the right direction.